let's discuss this very grim picture of things in Nigeria. He's a fiscal policy partner and Africa tax leader at PwC, Taiwo Oyedele. He's live here in the studio with me. Thanks for coming through tonight. I have whetted your appetite enough with those statistics.
Indeed.
These are figures don't lie. But again, the figures could be doctored. But those were numbers. So tell me, just give me an idea of what your thoughts are around those numbers we just showed you.
Yeah, to be honest, some years obviously were better than the others, but we have a very predictable pattern of once is either pre-election or election years, foreign investors are afraid, right? And we see the numbers consistently going down in those periods. But I also have to say that overall, even for the years when you had over $8 billion, within the context of the size of our economy and the things we have to deal with, that's like a drop in the ocean. We should be talking about hundreds of billions of dollars. So this just goes to show that there's a long way for us to go.
What do you think were the key drivers behind the decline in foreign investment, in particular over the last year? So if you could look at the numbers again, if you look at Okay, like 2008, 2007, 2011, when we were doing roughly $10 billion. You said even as at those years of 2007, 2008, 2009, those were not enough. By now, we're down to a few hundreds of millions of dollars.
Yeah. You know, by the way, I think even just last year, even at the height of the pandemic, Bloomberg says that we had about $17 trillion of investable funds around the world. Some of them attracting 0% or even negative.
Easy money.
Yes, easy money. So what that means is if you think about Nigeria, largest economy in Africa, 200 million people, then we should be talking about hundreds of billions. That's the context within which I made that point. But really, if you are looking at why is it that we're having this decline, even starting from a small base, but then it's declining, you would first and foremost want to consider the nature of the investment. So mostly foreign direct investment is what we want because that's the one that is patient and it waits for some time. But we also have in those numbers a significant portion of that in foreign portfolio investment. So these are people just coming to the stock market to make some gains, they run back, they buy government bonds. So if you think about all of that, it's clear to me that the number one reason why we're having that decline over the past decade in particular has been insecurity. I think Boko Haram started about 11 years ago, and then it has metamorphosed and diversified into different shades of all the evil things that we don't want in our country. And what that does for the investor is it says, well, this is not a safe place to go. But even for us those of us that are even Nigerians, right, you have to think twice before you invest. So how much less the foreigners? Next to that, I would say is policy uncertainties. We seem to be very good at confusing everybody, sometimes confusing ourselves. Just think about the Petroleum Industry Act. It took us so long to pass it, and when we finish passing it, we say maybe we should suspend it, maybe we shouldn't start, right? Those policy uncertainties, fiscal policies, trade policies, monetary policies, they can create the uncertainty that investors don't find acceptable. And in particular around monetary policy is the forex regime. If I bring $1 million, would I be able to take it back? When I'm taking it back, would it be half of that amount after a few years? Would I have to go to the black market? Is my investment safe? So those issues around safety of investment of people, security generally, policy environment, as well as just, the returns that you're going to get. So those have not been very, very compelling. Nigeria's
been said to be a land of opportunities. But again, insecurity, Nigeria is not the only country in the world where you have insecurity. So let me just put insecurity aside. Because the whole issue of insecurity was not a civil war in the country that we had.
Yes.
So it wasn't like Sierra Leone many years ago or Liberia or whatever. So it was insecurity in one very small corner of the Northeast. But even at that, we were unable to attract foreign direct investment before we blame insecurity for virtually everything.
I like that. Actually, the way I see it is this. When it comes to security or insecurity, there's the reality and there's the perception. and both are equally important.
To investors, to international investors.
Especially because they are not here, right? If you don't live in Nigeria, the impression you get, many of them actually think that Nigeria is just, in fact, they think Africa is one country, right? So the impression that people have is that there is crisis everywhere in Nigeria. So that may not be the reality, but that is the perception, and that's why it has an impact. The second important point is that when you talk about foreign investment, you have to think about it about, competitiveness. So I agree with you. There are insecurities in many countries.
I like the competitiveness because without insecurity, without the Boko Haram in the northeast, were we competitive? The numbers show that. Were we competitive really? That's the back question. Ab initio.
We were competitive to the extent that some people came to Nigeria to invest. The reason why others did not come is that we're not competitive enough. This is how it works. From my dealing with investors and all the things that interest them.
Yes, at PwC, right? I know. As an international advisory. So you listen to a lot of those guys. Yes.
So if I want to summarize it, I'll say what investors are looking for is what I call risk-adjusted returns that are competitive. So in other words, if I consider your risk, and it doesn't have to be real, right? It can be perceived risk.
Yes.
Yeah. But as far as I'm concerned as an investor, that's what I believe the risk is. If I think your risk is very high,
and you price it at that level.
I price it, in fact, I add premium to it.
Yes.
So you say, well, I can give you 20%, but I say, well, based on my analysis, I'm looking for 40%. I can't find it, so I'm not coming. By the way, the Fed would increase their interest rate by 0.25, 25 basis points, maybe best 50 basis points. And then people shift money from the rest of the world where they're earning 10%.
Back to the United States.
Why would anybody do that? It is because for them, the risk in Nigeria, at a point, our Eurobond was at distress level. It was more than 1,000 basis points above the Fed rate.
Yes.
Why would anybody leave 12, 13% to go and do 2%? It's because of risk.
In the United States.
Exactly. It's because of risk. So for investors, this is extremely important. Risk-adjusted returns is what they're looking for, and it has to be competitive. Some would easily do 2% in Europe than do 15% in Nigeria. Our policymakers must really understand this point, because sometimes the risk that we create is not real. It's either the ones that we use our mouth to create confusion. You award one contract today, somebody says we did not follow due process, you cancel it, then you re-award again.
Where the other party is already ready to pay.
The investing community internationally are picking those information. Respect for the rule of law. If I have a disagreement, which is a normal thing in business, can I get justice? Do I have to pay a bribe before they can even file my case? Those things, and which is why we need to de-risk Nigeria. If you take out the risk that I would say, are self-inflicted, our real risk is not different from what you find in most countries around the world. And once you address that, you'll be seeing these numbers in the hundreds of billions of dollars.
So we've got to do something. Some measures of foreign direct investment are focused on fintech and digital space. And despite the whole insecurity everyone is talking about, Microsoft has got a very big, massive office just a few meters away from where we are here in Ikoidi. And then you've got Google as well and others. So if this insecurity is that much, they wouldn't even step here. I flutter with. So I don't understand why everyone's saying insecurity, but the digital fintech guys are coming in droves. Yes, they came to Nigeria.
Yeah, that's an interesting sector.
So I'm wondering why is this not, just such money is not coming into mine and steel, it's not coming into the economic zones, it's not coming to oil and gas, it's not coming into railways, such that we outborrow ourselves right now, and we're beginning to find a way. Perhaps some PPP will work.
I have to say again that first and foremost, for almost every sector you look into, right, policy environment can be better. So why would anybody want to invest in electricity sector in Nigeria if the price is regulated and you're not sure of making your money back? Or even the oil and gas, or even if you're talking about, ports. So, but that's aside. Now, to your point, why is it that fintechs are attracting investment and some of the tech companies are investing in Nigeria? There are two issues. One is that if you think about it carefully, some of these fintech, what they've done is to change their headquarters to other places. So Oyedele, for example, is headquartered in New York, right? So what that does to investors is they see themselves as investing in a US company rather than a Nigerian company. But for us in the press, we proudly say it's a Nigerian investment. And then the Microsoft and the rest of them that are investing in Nigeria, for example, my understanding of that Microsoft investment is this is more like a service center, right? Because they know that Naira first is not behaving well against other foreign currencies. We have loads of unemployed people, but they're actually smart, right? So why don't you have a service center in Nigeria, low cost? You pay them a few dollars and they're very excited. So it makes, yes, it makes business sense for those investors. I do commend them. We need more. There's no reason why we can't have more of those investors. There's no reason why we can't have car manufacturers manufacturing from Nigeria, especially under the African Continental Free Trade area. Why can't we make Nigeria the manufacturing hub for Africa? It just makes sense, right? And then from Nigeria, you service the rest of Africa. So it's progress. We can see more. It's not surprising that in the other sectors you're not seeing so much investment is because the risk is just too much, particularly in terms of the policy environment.
But again, what are the consequences really when foreign capital flows begin to dwindle into sub-zero level? What does it really mean for an economy such as Nigeria?
It means a lot. One, there can be no growth without investment. That's almost asking for an impossibility. It will never happen. Every growth in every country has to be supported by investment.
It's like a bank without deposits.
Absolutely. You can't have a bank, right?
A commercial bank for that matter.
Yes.
Where there's nobody's bringing any money in.
Deposit, yeah. So whether you're talking about domestic and foreign investment, there must be investment for there to be growth. Now, without growth, you cannot create employment. If you cannot create employment and value in the economy, poverty will be on the increase. Government will not be able to generate revenue because you can only tax profit, right? And tax income and consumption. You can't tax somebody who has nothing. If you throw them up, nothing comes out, right? So, and then that can lead to crises such as insecurity. Because when you have people who are strong, energetic, but they have nothing to do, of course, the devil will engage them. So the implications are humongous.
Yeah, for example,
yes.
Well, even for the universities, 6 months on strike, you can imagine the tax implications of that, because the suppliers of raw materials, whatever they need in schools.
Yes, a lot of business activities are no longer going on there. And if you also think about it, 6 months that is lost can never be regained, right? So these are people who should maybe enter the labor market 6 months earlier than whatever it is that when they enter and start creating value within the system. So we lost that opportunity. Which is we have to take human capital very, very seriously, as well as the business environment to attract both domestic and foreign investment.
So the whole idea about chasing revenue without strategic investments, foreign capital inflows, is just blinking in the dark.
It's blinking in the dark. It's hoping for the impossible. And it's just, I would say, it's not even a dream, it's a nightmare. You have to be strategic, right? So nobody says because they love Nigeria, they'll bring $1 billion. So there has to be something in it for them. So, and then you have to always look at, and I say this often, are you taxing seed or fruit? In a country where they are taxing seed, I will not go there because they'll kill my investment before I get anything. But if they wait patiently and invest with me, and the fruits start coming out, well, of course, I don't mind.
I can sense the parable.
Yeah, sharing that with them.
Parable. The parable of the seed sower.
Yes.
The one that fell among the thorns.
So Nigeria has to be strategic in the way we manage the investment climate.
Is that an agenda for the new administration next year?
It has to be. I'll say the only thing that is probably more important than this is security. Next to this, in fact, I think this can also address insecurity. Yeah, you address investment and people are engaged and there's infrastructure. They won't have time
for... And you open up the country.
Yes, open up the country.
Industrialization.
Yes, even tourism, right?
Yes.
We have to relook at our policies. Can people easily come in and go out? Because if we had that today, we would not be struggling with where Naira is in terms of exchange rate, right? because you then diversify the economy, not only in terms of the sectors, but the sources of foreign exchange as well as government revenue.
Yeah, so the whole airline issue, can't take dollars, they don't have enough taken out because we don't have foreign capital.
That's a big negative. We shouldn't allow that to happen. We shouldn't have allowed that to happen in the first place, right? Because they've earned their money legitimately. And you're not doing them a favor by coming. In fact, by the way, the Nigerian airlines too have foreign denominated costs. So we have to allow that, because at the end of the day, Nigerians are still traveling. What they will then do is pass the burden to the individuals to go and look for the dollars, which is still the same strain on your economy, but now you sent a wrong signal to the international community. It's not only Nigeria, by the way, that is not able to allow airlines to repatriate, but why do we want to belong to the group of wrong things all of the times? You know?
So the final part of this conversation for a couple of minutes is that we've seen news in which countries such as Saudi Arabia invest in Morocco, in Egypt, and things like that. And I haven't really seen Nigeria saying, look, we are investing in the Ghana petroleum industry. We are investing in XY projects, economies in other parts of the world. Do we need to begin to open up that conversation under the new administration, perhaps using the NSIA vehicle, or perhaps another strategic investment fund that will be able to take something and say, look, we could also earn something from outside. You want folks to invest in you, then you've got to invest outside as well. China is holding almost $3 trillion, if not more, of U.S. financial assets.
This is a very strategic conversation, right? Every country has to think about first geopolitics, because at the end of the day, there are countries that even when you don't like them, when they speak, you have to pay attention for your own sake, right? It's not just because you like the US, it's because you have to listen to what they have to say. Or China, right? Now, Nigeria has to think about where is it that we have comparative and competitive advantage. So energy is one area where we can have competitive advantage. We can differentiate ourselves and use NNPC Limited as the vehicle to invest in strategic countries around Africa, maybe even the rest of the world. Look
at the East Africa oil pipeline in Uganda, Tanzania right now. The Mozambicans are looking at $100 billion in gas LNG. We should have a bite of that.
Even when the whole world said they didn't want fossil, and then Russia and
they're about ready to ship the first one.
They start changing their mind.
Hold on a second. $100 billion Mozambique in the northern part of Southern Africa. Nigeria should have a bite of that.
We should be swimming in dollars by now. Those investments should be coming our way.
So bringing foreign revenue.
That is not happening, right? And the other way to also invest in other countries is to support your businesses to go out. Financial services, banks, telecom, even creative sector. And there are many countries where as they open up the access for those investments, they follow up government to government, and they even negotiate tax treaties. You know, when MTN and the rest of them started coming to Nigeria, South African government came and said, you know what, let's sign a double tax treaty. And they got it done.
Smart fellas.
That's what we need to do in Nigeria. We have to lead from the front.
So a few guys that we have here, we should support them.
We need to. We need to support them.
The big cement makers.
Being successful is not a crime, because that's what we do in Nigeria. We then shame and name them and blame them for all the things that are going wrong in Nigeria. Instead of supporting them, let them make more money and they can bring it back to Nigeria.
Taiwo, thank you so much. Have a great evening.
Thanks
for coming on the show. Taiwo Oyedele, Fiscal Policy Partner and Africa Tax Leader at PwC.